Hi everyone, I'm Karunya Rao, and on Ideas for Profit today we give you a deep dive analysis of Rakesh Jhunjhunwala-backed gaming company Nazara Technologies, which made its D3 debut back in March. Nazara has delivered an impressive set of earnings for Q4 FY21. Revenue was up 41% year on year, partly driven by acquisitions, while the operating profit surged manifold due to a favorable base effect. Nazara ended FY21 on a strong note. For the full year, the company posted revenues worth 454 crores with an operating margin of 12.7%. On the profitability front, Nazara delivered positive net income of 14 crores compared to a loss last year. Growth in the acquired businesses continued to be very strong. Esports saw a record year as the segment accounted for 37% of the total revenue with more than half of operating profits. Gamified early learning contributed nearly 39% to the top line. The underlying operating metrics were solid owing to rapid addition of new paid subscribers and high retention rates. Other segments, freemium and telco subscriptions saw flattish revenue growth. Real money gaming contracted significantly due to lack of live sporting events and legal and regulatory changes. Given the prevailing statutory risks, management has decided to forego further investment in this very vertical until the existing issues get resolved. Nazara enjoys a deep moat in the esports business. Its subsidiary Nodwin enjoys almost 80% share in the domestic esports market. The company has exclusive partnerships with game publishers, brands, media houses for managing and organizing gaming events. While the pandemic is certainly acting as a barrier to organizing live gaming events, esports will continue to be the key revenue driver for Nazara over the next few years. Moving on, investment from Krafton, which is the owner of PUBG, fortifies its presence in the booming sector and also opens up new opportunities for organizing large-scale gaming events in the Southeast Asian markets. Because of the secular sector tailwinds resulting from the emerging gaming landscape, esports business has a potential to reach 1,000 crores worth of revenue in the next 4 to 5 years. The global market for gamified early learning is pegged at almost $10 billion, with 50% of that coming from the US alone. This market is expected to triple by 2025. Now, realizing the market potential, Nazara has entered the gamified early learning segment in North America through the acquisition of Kiddopia in 2019. Kiddopia is a subscription-based app which enhances the basic life skills of children in the age bracket of 2 to 7 years through interactive games and activities. The segment as well as the space are hyper competitive, but it has the potential to generate very high margins as majority of the investments, which is content development, marketing and customer acquisition, are front loaded with revenues and profits accruing in later years. The business is shaping up well under Nazara as the paid subscriber base has swelled from 197K in March 2020 to more than 340K in March 2021. Nazara seems to have a high valuation based on historical parameters, but the company looks attractive from both macro and micro perspectives. Given that the market is still at a nascent stage, the company is well poised to benefit from structural uptrends in markets like Asia and Africa, where the tech-savvy youth are just starting out in the digital world of gaming. The M&A track record is worth noting, and therefore the cash on the balance sheet provides additional levers for growth through inorganic means. Valuations, like I said, are undeniably expensive, but investors should view the business in the context of its addressable market size and long-term structural industry tailwinds. The business presents long-term investors, those who have at least 5 years of time horizon, an attractive opportunity to invest in a company with excellent prospects. Of course, like any other business, there are some key risks to watch out for: the evolving competitive landscape, consumer trends, more importantly, adverse changes on the regulatory side. These remain some key risks to our investment thesis.